Thank you very much for coming to our economic update for January 2025. For those of you who are tuning in for the first time, either live today or like the most of you watching the recordings later, my name is Christina Cuprina. I am the CEO and Chief Economist of Sequoia Wealth Advisors. And we do these monthly webinars, or approximately monthly, just basically to provide a little bit of an update on the economy and the markets and the broader picture of what's going on. The intention of these webinars are really to answer everyone's questions, as well as give an update in a way that is easy to understand, interesting, and enjoyable to all who are attending, again, either live or, like most of you, the recordings later. A couple of housekeeping notes. First off, thank you so much for all the questions that everyone has sent in. There were a lot of questions this time, primarily focused in specific areas. So I've been able to aggregate all of those that's come in up until maybe the last hour or so, just given the fact I've been in meetings today. So please, 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 if you have questions, I can't stress enough, send it over as soon as you can. I've got it here live as well. Send your questions in early. You don't have to wait to see if I'm going to talk about the subject, because if I do, I'll just skip past the question. But I really want to make sure, if you're going to spend your valuable lifetime with me in this meeting, that your questions are answered. So send them in. No questions are out of bounds. If there's a regulatory reason I can't answer it, I'll certainly let you know. Here to answer the questions. Second note is our next economic outlook update is going to be live. So for those of you who can attend in person, it will be in Santa Cruz at the Hotel Paradox, where we did it last year. Thank you, Caitlin, on our team, for letting me know that in advance so I can let you know. I want to say it's the 23rd. I apologize on the exact date here, but we'll send a follow-up on that. It will also be live streamed on Zoom. So for all of you that cannot make it live, who are far away, you can attend live by Zoom, or you can, of course, watch the recording later. So with that being said, again, thank you very much for coming today. I'm going to touch upon four main topics, and usually there's the three topics that I always have questions on: the markets, the economy, and real estate. That comes up a lot of real estate related type of questions. And then oftentimes there's also the topic of the burning topic, I call it. There are actually two of them this time. Lots of questions around the economic impacts of the fires in California, as well as other things in that area. So I'll be talking a bit about that, at least what we know now at this point, as it's still obviously ongoing. Also, a lot of questions about the incoming administration and the potential economic impacts there as well. So I've done my guess again to aggregate and bring all your questions together. So please send them in if you've got more, or if you're not sure I got your question. That being said, I'm going to start off with kind of a high-level overview. So as we're coming into 2025, here's what we can kind of see at this point, and here's what we don't know. But before I do that, I always like to call myself out for what I said last year. Was I right? Was I wrong? Was I kind of right and kind of wrong? I always want to own what I said. And so this is just a very high level. The other thing is that all of our webinars are posted on our website, and I believe they're also on YouTube. So you can see what I said before. We purposely do that because we want openness and transparency and be able to share information. So once we go through the compliance regulatory process, we do post them and put them up. So you can always watch older ones. The biggest thing with last year, where there was a bit of a divergence from the early economic data and what the outcome of the year was the fact that the economy was clearly slowing at the beginning of last year. And I'd mentioned that more than once: the economy is slowing, the economy is slowing. However, the markets did amazingly well last year. And so there's maybe some questions there. Well, you said it was slowing, but look, my portfolio looks great. It did well. What was not foreseen was this extraordinary amount of money that was pumped into the economy by the federal government. And that really made a big difference on what happened with the economy, because as the money gets pushed into the system, it gets used. And we saw a really big jump on asset prices, not only your stocks, but also real estate in many markets. We saw that in more speculative investments like cryptocurrencies. You just saw money looking for places to go. And not only in the markets and the economy and investments and assets, but also in the real estate area. I'll talk a little bit more about that in detail, for people who have cash on hand, as opposed to people that have to get a mortgage at the current rates. It's been kind of a tale of two real estate markets. We also saw even people remodeling their homes and doing big trips. It was more of that spending for people who had it. And I talked a little bit about this before, so something I want to stress here is that this extraordinary government spending has really impacted what I want to call two different economies. And there's actually much more than two different economies, but let's just keep this simple for now. People who own assets, stocks, real estate, businesses that have been successful, or people who own assets that could benefit from this money in the system had a very different story than people that didn't have as much in the way of assets and were much more crushed by the ongoing inflation issues. Inflation is not just CPI. Inflation is what does it cost you to live? What is your food cost? That's in CPI. What is your shelter cost? That's in CPI. But your electric bill is not. A lot of the other expenses that have gone up meaningfully are not. So if you don't have the ability to offset it through asset appreciation, the economy was going the other direction for you. And now you can feel much more compressed, much more limitations because your essentials are going up, but your income and your assets are staying more fixed. So that's been why sometimes when I talk about the economy, I want to stress that the economy is not the same for everyone. The economy is highly personal, much more than these two examples that I gave. In the interest of trying to get as much information to as much people as possible in an hour period of time, I just wanted to start with that and say, please, 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 if you want to understand more about your economy or a specific thing, reach out. Happy to answer that in a more localized way. So this is really what kind of changed the direction of the markets and the economy. Kind of going through 2025 is just that extraordinary amount of money coming into the system and then pushing into assets. This is not a bubble. It is not a speculative, but well, there are some assets that are probably more in bubble territory right now. But generally, most of this has been the companies are earning this money. They're getting the money, they're earning it. So it's not kind of a fluffy situation that we've had with previous rapid rises of asset prices. Earnings season will be starting here next week, and we're going to start to see how are companies doing and have they earned these higher stock prices or not. So you will probably see some volatility around earnings season as this sort of plays out. Are the prices of the stocks now justified by companies' earnings? To me, it's always unwrapping a present every quarter because you can really see what's happening behind the scenes with companies. And if there are buying opportunities, is this time to sell or time to continue to hold this company is kind of laid clear in earnings season. So that was one big thing I want to bring up with that. That's where that bigger differential came. The economy was slowing. A lot of areas of the economy did slow. However, that amount of money that was coming in really did stimulate things quite a bit up. Right now, the S&P 500, literally 10 companies are like 30, I want to say 39, 37, 39% of the S&P 500. So you think of the market, the S&P 500 is 500 companies, but 10 of them are over a third and under a half, but big majority of them are at least 10 companies. This is not uncommon. I mean, it is market cap weighted, so we always have a few companies at the top of the S&P, but that's narrowed a lot with a lot of these tech companies. It's a lot of what the spending is on AI and technology right now and the direction that's going that has driven up these companies. You'll probably continue to see some companies staying high and other companies dropping as other companies come up because technology is moving so rapidly right now. One company holding may not always hold that. And a really good example we've seen with NVIDIA recently, there's been two things there. Google came out and announced about their quantum chip. If the quantum chip becomes widespread and we start using a lot more of this, it's going to destroy NVIDIA's business model and what they're doing. So head of NVIDIA came out and basically said, oh, we're 10, 20 years away from that. He doesn't know. Google doesn't know. It's a question of how well this technology is developed. It still has some glitches need to be worked out. However, it is a big game changer. And I only use that as an example, not to predict who's going to do well or who's right. It's to show you that right now, the speed of technological innovation is moving exponentially. And it's really going to change the landscape to what companies can adapt to that, and what companies can produce needed resources or technologies for that, and what companies can't keep up. And you can see a lot more of that dropping off and rising, dropping off and rising. And that's why in many situations, more tactical strategy tends to work better than more passive strategy, because you can adjust for that as the tide is turning and changing with that. So that's one thing I want to bring up. First, at this point, I'm going to tell you where the uncertainty is. But the first point is, first half of the year, expect more volatility. It'll be a slower growth out the gate. more volatility in the markets. That's highly probable at this point. It has nothing to do with the new administration coming in. All of these things were in motion well before the election, and they would have played out regardless of whether it's a Trump or a Harris presidency. This is really a lot of things that happen in the economy are a long time in the making. They're not just suddenly changing because of a change in politics or political who's holding power. These issues are going to be, inflation's going to stay stubbornly high, and it will likely rise in the second half. Again, nothing to do with policy because we don't even know what it is yet. Everything to do with things that are in place beforehand. Both Janet Yellen, our Treasury Secretary, and Chairman Powell of the Fed have stated this over and over again. The government spending, the government debt levels are unsustainable and need to be curtailed. And that is what's the Fed's trying hard to control inflation, but they can't stop the flood of money that's coming in. And this is a balance of what is taking place. And I will give Janet Yellen some great credit. We are literally, overwhelmed, a flood of Treasury securities right now as the government, obviously, with all this debt. She's done a good job of keeping a lot of this short duration, which gives the government opportunity to pay it off and not necessarily reissue it if we can get this under control. So we don't have as much long-dated treasuries as we do short-dated. Depending on how this plays out with the new administration, that does give us more opportunity to start to get this under control than we would have if it was all long-dated and have to buy it back. Take it out earlier. So sorry if that gets a little bit in the weeds for you, but that's something that we're kind of addressing right now. Is probably one of the biggest, I'm gonna call it threats, but biggest concerns right now really is the spending. And I'll go into that a little bit more later on, but that answers hopefully some of those questions there as well. So I'm checking my notes really quickly. Second half of the year looks to be growth. Again, highly probable based on what we know now. Policy again could change. But the second half of the year looks to be more of a growth, not necessarily as good as last year, but more of a growth environment than the first half. So what that means to you as investors, obviously individually, for all of you who are working with me, I'm paying attention to this and I'm making adjustments in the portfolio as appropriate. Very important, two things would be very important, that you let me know if you have a need for money outside of what we already know about your needs, because we want to keep that money in a more conservative area, potentially, depending on your situation and what other resources you have through the time of volatility, to minimize the risk of us having to sell good things at bad prices on the downside. The other thing also is with that, which is very important, is to basically, I would say, have a structure of your buckets that can potentially, for appropriate situations, provide opportunity if we do have big drawbacks. Is that an opportunity to buy? And that will depend on your individual plan and your individual situation. So obviously not one size fits all. So there's a lot of reasoning for that. Again, for those of you working with us, what we know about you, we're already planning and adjusting for. If there's something we don't know, let us know. If you're not working with us, definitely speak with your advisor or speak with us, just to make sure these things are lined up and have a really clear understanding of how they're going to navigate through this time. There's going to be a lot of changes. The other thing I just want to bring up there, the growth in the second half at this point is largely going to be a result of rising consumer spending. So consumers will have more money in their pockets, and also onshoring. Onshoring was already put in place by the outgoing administration, the Biden administration, this push towards onshoring. It is highly probable the Trump administration will not only continue with that, but probably push more in that direction because it goes along with the American, American strength, American exceptionalism, that kind of push that they've kind of had, the idea of bringing things home and keeping American companies strong. I don't see that changing. However, even with no change, if nothing changed, this will likely happen as a result of the Biden's administration's push that direction and the expectation the Trump administration will continue with that. But however, we also get more inflation in the second half. So inflation's not going away unless there's some major shifts in the government spending in the relatively near term. And that I'll get into when I talk about Trump administration and kind of what we're seeing at this point. So that's sort of a high level. It is very early in the year. There are so many things that could happen that will change this. So please keep tuning into these each month for updates on that, because it gets a little bit more foggy when you're looking out further away. Things like inflation are easier to see. And something to keep in mind about inflation, as I mentioned earlier, there's personal inflation, like what is your cost of living, what is your personal inflation, and then there's the official government number. But one of the biggest challenges is around a third of the government CPI number is actually shelter. And shelter is calculated two ways. It's calculated by rents And it's also calculated what they call owner equivalent rents. What would it cost you to rent your home that you own or that you're living in? So this calculation obviously is affected by the rising prices of real estate across the country. That number gets higher and higher. It's a real number to people that are trying to rent. It is not a real number to someone who owns their home and is living in it, right? Because their costs are obviously fixed to the cost of maintaining the home, mortgage, et cetera, property taxes. So the number, like I said, the CPI number is the best thing the government can come up with to try and get an understanding. When you hear the government say, oh, inflation is 2%, and you're saying, no, it's not. My inflation's 15%. These numbers are fake. They're not real. They're right. They're not real to you because of how you spend. They're also very localized. So inflation in one market could be very different than inflation in another market. So I want to bring that up when I talk about inflation. I'm talking about the government numbers. I'm not just talking about your personal numbers. And that's where financial planning comes in. So you can help to look for ways to potentially minimize that, or at least mitigate some of the effects, because it will be coming back and again, just a result of all of this money and this kind of little potential growth spurt that we'll see later in the year. I mentioned about the drowning in treasuries, just to give you a little idea of it. From 2020 to 2024, we've added about $12 trillion of new government spending. That's about 9% a year. It is huge. These are really, really, really big numbers. And I don't want to come across as a negative Nelly. And we do need to be aware of this, though. And it's very hard, or I shouldn't say it's very hard. I would recommend not trusting government when they say debt doesn't matter. There are ways it matters less and ways it matters more. So I want to talk a little bit about that. But before I do, I'm not really a fan of screen sharing because it takes me away from the flow of talking to you, but I would like to show you something because I feel like you may want to look at this yourself. I'll tell you where you can get it. So this is my friend Fred. Fred is the Fed's data center. Hope you all can see this, okay? So as you can see the address here, Fred, St. Louis Fed.org, Federal Reserve data. Okay, so I always like to tell you where I'm getting information from, and you can always ask me because there's so much misinformation out there and so much cherry-picked information. I always feel like it's very important that you yourselves can look. So Fred, I call my friend Fred, is the Fed's data center. And why I'm sharing this with you is this is what everyone probably intuitively already knows. This is the federal debt. Clearly, this is unsustainable. Okay, this is kind of how the chart's going. These gray areas are times of recession. And we're going to go back here to the pandemic. You can see that shot up, you know, that massive stimulus when we had everything locked down during the pandemic. But what you can see really importantly here is post-pandemic, it's pretty much parabolic, right? It continues to go up. But why I'm showing you this is this chart looks really scary, and it is an area of concern. But I'd like to show you another chart, which is something that we pay a lot of attention to. A little technical here, but I'll explain it to you. Federal debt as a percentage of gross domestic product, which is how our economy is doing on a national scale. So it's a little bit different. You notice the chart, while it is, yes, getting higher and higher, it's a little different here. As you can see, the spike is a big spending during the pandemic, but you see a little pullback. So if the money is growing the economy, it's less onerous than the overall debt levels. Now, right now, because the economy has been growing strongly during this period of time, even though we're issuing this massive debt, remember this period, $12 trillion new dollars, right? We're doing all this. You see, it's actually staying more stable. Okay, now this works because the economy is growing. We get a recession or a crisis, this gets bad and ugly fast. So I only want to bring that up because this is why you often will hear these two different numbers. Debt doesn't matter, or debt's a big deal. And again, there's countless charts here, but I did want to kind of show you that. Hopefully it wasn't too geeky for everybody, but I felt like, again, relevant information. This still is an issue because we have an even bigger issue coming, which is the cost of the entitlement programs. And please don't get upset for me for calling them entitlement programs. It is technically what they're called. Social Security, Medicare, and Medi-Cal/Medicaid. These three programs, and I've said this before, I know, are well over 2/3 now of government spending. The interest on the debt is another big slice of the pie. Defense spending, another big slice of the pie. And all the stuff we debate about politically are a really small slice of the pie. As our population ages, as the cost of these programs grow, it really is starting to crush out other areas of government spending. This challenge is going to be exacerbated in the coming years, just as our population shifts and more people go onto these programs. This is assuming no changes are made to the programs and no enhancements are made when more people are on them by policy changes. So this is going to be the reason to get the debt under control, is to keep these programs strong and solvent. This is important, and this is critical for the country. As I'm speaking as an economist here, I know people say there's a lot of things critical for the country. This is really important, because in order to sustain these programs, not only will changes almost certainly have to be made to the programs in the future, but we want to be able to have the resources to be able to support them long term. So that being said, that was a high with so many questions about the debt. I want to make sure I covered that. And then I'm going to get into the other administration here in a moment. But policy matters. And now we're coming into a new administration. And we have a new administration that people tend to either love or hate based on historical precedents of all of this politics. And so some people are really optimistic, and other people are very pessimistic about this based largely on their political views. And so I wanted to kind of cut through a lot of that from an economic perspective. And by the way, I'm here to talk about economics. That's why you're here spending time with me. I understand there's other issues that are very important to people, and it's not all about the economics. But for the purpose of this webinar, I'm going to stick on the economic side of it. Unless questions come up otherwise. So we don't really know a lot of what the details are, which is always true anytime we have a new administration coming in. Sometimes we can look back if we have a second term of an existing leader, like if Biden had won again and run, we would have had a really pretty good sense, because he probably would have continued on with a lot of what he had been doing the previous 4 years. Trump is a little different, because while he has been in office before, I'm going to use his own words here, so I'm not picking on him. He didn't know what he was doing the first time, and this time he feels better prepared. Again, his words. And because of that, it will likely be a little bit more, or maybe even a lot more thought towards policy, who he appoints for various positions, yes, and what he's doing. There may be more thought on that, because he seems aware of his lack of knowledge the first time around. Again, these are his words, and also, kind of where he's going to want to focus this time. Campaign. Remember, one thing is important: campaigning with anyone is not the same as governing. So they campaign on things, they say they're going to do all these things, they want the votes, they want to win, they could really believe in it and really want to do it. But there's the reality when you get in office is that you can't do everything you want to do, because there's this thing called Congress. And even though the Republicans do have the majority, it's not a super majority. They're not going to be able to just do what they want and not have any Democratic input or say. They're going to need to work with the Democrats to get things done. So a lot of the policy that likely will get passed, or all things that will happen, is likely going to be things that are going to at least have enough Democratic agreement to get it through. And I'll bring that up because a lot of some of the things that were said during campaigning are unlikely to actually happen, just given the reality of the reality on the ground of the politics. So I'm going to focus on, kind of some of the economic areas. So right now we're in the process of his nominees being, I'm probably going to use the wrong terminology here, approved, appointed. And so each of them will go through that process to be able to get into the position. I have not looked at all of the various people, because again, I have no say in whether they'll be appointed or not. So it's more important to me to look at it when they're in. I did look at some of them that will have the biggest economic input. So the good news is Powell will stay on, Chairman Powell of the Fed. He was actually originally appointed by Trump in his first administration, and he was reappointed by Biden. So he's done a good job, but both sides, both presidents have agreed, and Trump will keep him. His term will be up later during Trump's presidency, and he will likely appoint somebody new. That is not uncommon. And so that being said, we'll address that when it happens, but now there'll be no change to the Fed. Stability during a political transition. On the economic side, it's really helpful that was not changed, and that he's staying with the status quo. With Janet Yellen, the Treasury Secretary, her replacement is highly liked and respected by economists as well as the markets. So that's a good sign. I have not deeply again, until a person's in, we don't know. We don't need someone who's been doing the job before. We need someone who's able to do the job. So I don't think experience is always the predictor of success. It's more so, can they learn on the job? Can they adapt on the job? and what is their knowledge in the subject matter. So we will see, as various people get appointed in various departments, we'll be able to get a sense of what the economic components to that is within the government. So it's a little early to talk a lot about appointees until they're in position. In the economic side, SEC, Treasury, kind of what's going on the Fed, the economics, directly economic sides, at this point, I don't have any direct concerns. They seem to be qualified people, if, again, assuming they all get the position. The other departments, again, I'm going to look at over time and kind of see how they, not only who they are and if they get in, but what are their policies, where are they going to focus, and what will be the economic impacts, and then I can guide more. A lot of this will be more on how we invest, how we don't invest, what, if any, regulatory changes will take place. It'll be a lot smoother than it was under the previous administration, where we had a lot of rulemaking authority handed over to the various departments. And so in the past, when there'd be a new law proposed, it would go through Congress and give us time to kind of adapt and plan for it, you know, whether it passed or not. But with the enhanced rulemaking authority of the Biden administration and given the various departments, we got surprised a lot, because all of a sudden the FTC can come out and say, hey, we got a new law. That's it. And there was no time to plan. There was no vetting or back and forth like it would be through Congress. Supreme Court has taken a lot of that away. So I expect we're going to go back to the way things were before, where any rule changes will go through a process. Well, most, I should say, rule changes outside of executive orders go through a process. Again, keep you up to date with that. They're not even in office yet, much less doing anything. So this will take time. I expect in the spring, March, April, maybe May period, we're probably going to get a much better sense of where the focus is, and not just the talk, but the action on the ground. So you can want to do something. How are you going to pay for it? You can want to do something. Is this going to get passed through Congress? That's something that we're going to have to carefully watch. And I feel like, again, I would be speculating at this point with a lot of that. It's another one here is a talk about kind of the three, I just make it like this, three big quote unquote things, or the two bigger economic things, because we already touched upon administration and who gets put in place, which is immigration and tariffs. Okay, if there's any other subjects that you want me to talk about, you think about the economy, post them, let me know so I can answer those. But these are probably the two biggest ones. Immigration at this point, what the Trump administration seems to be putting in place, or proposing and putting in place, and something where they do have a lot of Democratic support, is a focus on immigrants that are here illegally that have committed crimes or criminals. That seems to be where the focus is now. They call it the worst first. And if this is, and I'm not getting in, I'm sorry, to the social aspects, I'm talking about the economic side here. If this is where they land, if they say, hey, we're not letting anybody else in that's not vetted, and we're going to deport anyone who's committed crimes or is a criminal here, that likely will get passed and it will be done. And that's already in process right now under the current administration. Actually, they're already kind of pushing some of these things through. So I would say that it's highly probable that immigration policy will be successful, because there's not too much pushback to vetting everyone before being allowed to enter, and also for deporting people that are committing crimes. Again, I'm not here to touch on anyone's sensitivities here, just talking about it economic. Why economic? Because if it went further, if it's we're deporting everybody, if it becomes a much bigger process, it will create a tremendous instability economically. Not because of people not here legally, but people here legally on guest worker programs or temporary work visas could become fearful, could become concerned, not go to work or leave, because it's a risk to their family, right? It's that uncertainty, that fear, that risk. And that will have a pretty big economic impact, and especially on the industries that use a lot of guest worker immigrants and whatnot. The other thing is the CBO came out, I believe today or yesterday, and let us know that by 2033, more of us are going to die than get born in the United States. So we need people to come in, and we need to grow our population. From the simple standpoint, sorry, again, economics, we need people to pay into the system if we want the systems to continue to run. So I don't see any reasonable scenario where we're just going to really cut immigration, or immigration is going to go away. It's going to be more so no more catch and release, no more anybody can walk in. We just want to know who's coming, but we know that we need it. I'm thinking that's probably going to be it. Again, I'm making a lot of assumptions here by what I'm seeing and hearing in the political space. I truly don't know. So we're starting with that. We'll change my mind if data comes out otherwise. Tariffs is a big headline. Tariffs are one of those things, every administration uses them, some more than others. Trump did a lot of tariffs when he was in the first time. Biden got rid of almost everything not almost everything, but a lot of what Trump did, Biden got rid of when he came into office. He did not get rid of Trump's tariffs. There's a reason for them. Biden added some of his own tariffs, right? And he continued to add them up until almost the end, right? He's added more tariffs. So tariffs, if wisely used, are used to protect US industry and also to punish countries that are not playing by the rules. And I'm just gonna throw out one example of that right now within China, is China has a mandate to many of their manufacturers to sell products below cost in the global market. And the government will make up the difference. Okay, so that's pretty unfair. If someone can manufacture something in China, sell it below their cost, it destroys all the other industries in the rest of the world, and the government's going to pay the difference so the company doesn't go bankrupt. That's pretty unfair. So we have to find ways to navigate that. So there's a little bit of a, protecting the United States, because you can have economic warfare as much as you can have, traditional military warfare. Is protecting U.S. industries, protecting our allies, but also stopping countries from, what I say, not playing from the rules, dumping and doing things like that, penalizing that to prevent that from destroying, again, our economies. Because you know what happens when all the competition's gone, then they can come back and raise the price and everybody has to buy from them. It's not good. It's not good for anyone, regardless of who's not playing by the rules. Will tariffs have a cost? Most definitely. It'll impact US companies that are buying overseas. If things become tariffed, it can affect their cost. It can affect our costs as consumers. An example, when Biden put the 100% tariff on Chinese electric vehicles, China is the biggest seller of electric vehicles globally. I mean, they got the EV market globally. They can do it low cost and they can get them out there. But we're not going to get low cost EVs from China because of the tariffs and probably other trade restrictions as well. Is that a good thing or a bad thing? Well, some people could argue that's not fair because more people could afford them and it would be better for the environment. Or other people could say, well, but that's protecting our industries, the United States. And also obviously there's security concerns with the chips and things like that. So it's sort of it depends where you look at it, and it depends what that impact you will be. But there almost certainly are going to be areas of rising costs if any tariffs have been done by any administration, not specifically a Trump thing. Again, not here to offend anyone. Trump is super noisy. What a lot of people would do quietly behind the scenes, he will just go out there and shout it out. And a lot of times he does it because he wants to negotiate, he wants to get attention. It's his way of doing things. So sometimes the scary news comes out, people get really concerned, but it's really more of a negotiating ploy than it's going to be the policy. A good example of that is when he came out and said, we're going to tariff Mexico and Canada 25%. I was like, the stock market was up that day. It didn't care because it kind of knew what he was doing. And I would like to see more of that because he's trying to bring people to the table and trying to get things done. Again, will this work well, not work well? It's going to be a matter of opinion, most certainly. And it's also going to be, how does this play out over time? A lot of things that are done by one administration take months, if not years, to manifest in the economy, which is why it's always challenging when you say how the economy did under Biden or Trump or Obama or Bush, because you can have this crossover periods, right? It takes a while for the new policies to take effect. It takes a while for the policies of the previous administration to lose effect. So presidents don't have as much control over the economy as we often say they do. But I do want to touch upon that tariff thing. So tariff, like I said, they're happening. There's a reason for it. The geopolitical situation is more unstable than probably many people are aware of, because we're more generally focused on domestic issues. But we do have some very serious issues happening geopolitically that can really have an adverse effect on the United States economically, cybersecurity wise, as well as militarily. This is going to be a very, very challenging time for the Trump administration, and whoever follows them is going to be navigating that. So sometimes we have to do things that may not be friendly economically, but they're necessary to protect our interests and those of our allies. And this is going to be constantly going. The cybersecurity threat doesn't get maybe as much attention as it should, but it's huge. And adversaries are only getting better and stronger at it. So this is a constant battle to protect not only companies, but also to protect our government and our infrastructure. So we're constantly working on that, and that has a cost as well. So I want to, again, make sure I have time to cover all this in your questions. Ask more questions if you have it. Real estate, I'm going to be fast on real estate because there's not been a lot of change in the space since last time. Really the biggest kind of changes are happening is the Fed, because of the concern of inflation, is not going to cut rates as aggressively as a lot of people hoped. So rates will stay higher longer, which will keep mortgage rates higher longer, which will have an impact on the real estate market outside of the cash buyers, or people who are selling for cash and buying another property. Because of the significant appreciation in price, you're having less movement in the real estate market, as and especially in California, where you have locked in low property taxes and huge capital gains. Moving is happening less often because of the cost of doing so. So you're having less movement, and very high costs on housing and very high mortgages is going to make for likely a slower process until rates start to, slower real estate process until rates start to come down. Though it is expected that the real estate markets will pick up again in the second half of the year, and home building is definitely going to pick up the second half of the year. Again, barring any policy changes that could really impact that. So you probably see more of that in the second half of the year. But we don't know exactly what it look like yet. Commercial real estate is a little bit different story. That's much more challenged. Different markets are different ways. Some commercial real estate is doing much better than others. But the Bay Area is really, really taking a hit. We have a lot more people working remotely or working hybridly. There was a lot of overbuilding, especially in office space and tech workspace that's not being utilized. A really good example of this is Google was going to build their big Google City in downtown San Jose with a housing and a workspace and everything, and they bought up a ton of land to do that. It's going to be a huge project. That's all been put on hold indefinitely. They're not doing it. Google's doing just fine. It's not an economic decision. It is that they're expanding in other states. They're opening campuses in other states because people want to live in different areas. And if they want them in the office, they got to build where people want to be. So not necessarily rushing out the door to leave California, but the expansion is happening out of California. But the bigger push is really much more of a remote workforce, and much more of a remote workforce is just not requiring as much office space. You need less space. Then there's a lot of vacant and empty space right now. I think one that really was attention grabbing was, I don't know if it was the end of 24, the beginning of 25, it just happened. Where a building in North San Jose in a tech business park, Technology Drive area, North San Jose. The last time the building sold, I think it sold in 2012 for around 75 million or so, this big building. It just recently sold to the Goodwill Industries for 17 million. It's a big change. And remember, the 75 million, there's 75, 75 around there, million in 2012. Now you imagine it's appreciated a lot to 2020, but what it just sold for recently is not, again, representative of all commercial real estate, because you don't know the desperation of the owners of that property, and if they really need to get out of some other debt, it could have just been sold at any price. So it's not, again, not representative of everything, but we are seeing significantly lower prices in commercial real estate in the Bay Area right now, and I'm not sure when if that's going to change, because it would have to be a big shift. There's not as much of incentive to open businesses in California right now because of cost and regulation. And there's just the ability for people to work and live in different states, and companies expanding outside of the necessarily having to be, again, not leaving, but not expanding at the same time. So we'll see how that plays out. But the commercial real estate in some markets is actually at big risk. Is a really big risk of pretty significant potential defaults. So you may see a lot of that happening, and also selling at lower prices. A lot of that commercial real estate, not all, unfortunately, but a lot of it is owned by large investors, which can absorb this a lot better. But for that's owned by private citizens or private businesses. It's going to, my higher probability is it may take some time. But don't take my word for it. Talk to an agent that knows your market and knows your property, because I am not a real estate expert, economist. Alrighty, here, I'm going to jump into the very last one, and I'm going to do questions. What I have here, 20 minutes. Okay. A lot of questions around the California fires and, Southern California fires and the economics around that. So I'm going to talk just high level right now, because there's a lot we don't know right now. The big impacts of this is going to be probably 3 or 4-fold. First one is, what's known at this point is that there was huge issues with the, I want to call it maybe the infrastructure There was, the lack of water, the issues that are known at this time, right? Things like that, the infrastructure, the ability to evacuate people or notify people. There's a lot of things that were discovered that were not well designed. The fact that firefighters don't have water, that's kind of like a big basic necessity that everybody expects is going to be there, and it wasn't. So there's going to be a lot of, I'm sure, analysis on what went right, what went wrong, to be able to plan better for these things out in the future. However, I'm almost certain that California is going to almost be forced to spend a lot of money in this space to make absolutely sure that they have the resources available if and when, and I should just say when, events like this happen again. So I would imagine, there's a lot of anger right now from what I'm hearing, seeing from people down there that I know. There's a lot of fear. And I would almost certainly say this is going to come back to bite the politicians, Governor Newsom, the mayor of Los Angeles, and anyone else involved in these departments, that this can't happen and this needs to be done. That will cost money. How they will get this money will mean cutbacks elsewhere, or it's going to be increasing taxes, whether it's localized or at a state level. One of these two things are going to happen, because this, again, the basic expectation of our elected leaders is that they provide security and safety to their constituents. That's a basic. Everything, all the politics, all the where you should fund and this and that, that did not happen in Southern California. So there's going to be a lot of push from the citizenry, and a lot of expectations gets done, and there will be a cost to that. And as we learn more about causes, there could be more things that happen. Another challenge, I think, that will be felt statewide and probably nationally, really, but I won't just focus on California here, is there has been recently a big conflict in recent years between people focused on climate change and people focused on the environment. And you would think the two would just be locked together, working together, but there's been the conflict because things that need to be done to help minimize climate change and stuff like green energy, as well as protective procedures like cutting down the trees to keep them away from power lines, has been a conflict between how do we protect people against the changing climate, and also how do we protect the environment. And Southern California, in that exact area, the fire had an issue a few years back where, it's called Southern Ed, I think, or Con Ed, and their PG&E was basically trying to take out all the wooden power poles in that Topanga region and put in metal power poles and put in new wires that are not likely to spark if they touch one. I'm doing all this work to mitigate the fire risk, but in doing so, some tree, oh gosh, I wrote it down, I should look at it, milk vetch, little bush, which is endangered, was disturbed. And so the environmentalists came out and said, you disturbed these trees, you can't do that. It was a lawsuit, the whole thing was shut down. I don't know if they ever did go and finish the work or not, but this is going to be something that we're going to be working on as a country, not just a California thing, on how do we protect the environment, but we also protect the citizens against these events. And I'm not trying to say that what happened in Southern California was related to climate change. I totally understand the Santa Ana winds and drought, whatever, wet seasons, dry seasons have been going on way longer than humans have been doing all this fossil fuel stuff. However, the costs are rising rapidly. So you can take all that out of the cost of rebuilding is very expensive. The cost of mitigating these things, climate change, no climate change, doesn't matter. These things happen and how we mitigate them. Hurricanes in the east, tornadoes, all of these issues, how do we mitigate them, and how do we find a balance in protecting the environment and also, again, protecting the citizenry and being prepared for future events that will almost certainly happen. I do see this as going to be an issue that's going to have a lot of cost to it, and also a lot of debate on how that plays out. Final thing I'll talk about before questions is insurance. That has been a really big, probably one of the third biggest questions I had, is what's going to happen to homeowners insurance in California. So as everyone I'm sure is well aware of, a lot of insurers have pulled out of California. A lot of policies have been canceled. Still, anybody who needed or wanted insurance could get it through the Cal Fair Plan. And the Cal Fair Plan was kind of the insurer of last resort that all the insurance companies doing business in California put money into. And that was like anybody could get in there no matter what. So everybody be insured. People wouldn't lose their house, because obviously, I'm sure as many of you know, if you have a mortgage, you're required to have insurance because the bank owns your house and they want to protect the asset. So the challenge has been recently is cancellations and rising costs. For a long time, California has capped what insurance companies can charge in premiums. And that's been a lot of the issues with the insurance companies that's driving them out, is that the cost to rebuild is greater than what they can collect. And insurance companies have a requirement to have so much in reserve for on their obligations, other liabilities essentially. So that has been a challenge, is they want to grow. California's the biggest state. They would love to, but they can't do it from a cost standpoint. So recently, anyway, I have a California state insurance license, even though I'm not in the business of selling insurance, because I'm advising on insurance matters to clients. So I'm getting all the notifications from the California Insurance Department now about all the changes that'll be happening. And I haven't had a chance to read them in detail. But one thing I noticed is that they really want people off the FAIR plan. And so they're incentivizing insurers to come back to California by allowing them to raise rates. However, also requiring them to issue a certain number of policies in the higher fire risk areas. So what this means to everyone, we don't know yet. Almost certainly will say that the rates will be rising, the cost of insurance will be rising significantly over time. How quickly? Because they have a lot of catch up to do, right? Because it's been capped. And what that looks like is unknown at that point. So I don't want to come across with fear. I would like to come across with planning for that. So just plan for what that's going to look like, how you'll insure your price. Maybe you'll have a much higher deductible. If the worst happens, you can self-insure a portion of it. What you're going to look at to be able to manage that. I personally had my insurance canceled in Aptos last year. That was fun because at the time I was like, I'm 2 blocks from the ocean in suburbia. Why me? I'm not in the fire risk. Well, we just saw it happen in California. That doesn't, Southern California. That does not mean anything anymore. Obviously, the risk is everywhere. But what I did, I don't have a mortgage, but I obviously want to insure my home. What I did is I just got a really massive deductible. And it's still, the cost went up quite a lot. So that I would say could likely continue. Now I want to bring that because there's a lot of questions around that, a lot of fear around that, about what would happen if you couldn't get insurance or they couldn't afford insurance. Time will tell, but do your very best to plan around. Do talk to somebody who's knowledgeable, so you do have a plan in place. Know your policy you have now really well. Know what it covers, what your deductibles are, because it doesn't cover everything. You want to know that, because if you need to shop for insurance, if you want to know what you have now and what you're going to give up or change, what's comparable, what's not. So just become aware of your policy. Also make sure it's sufficient. Sometimes people have had policies a long time and maybe they don't have enough coverage. Maybe they want to get an additional coverage, an umbrella policy or something like that. So that being said, just want to make sure I have time, oh my gosh, to cover the questions. But I think I did a lot of the questions in going over all of this. So a lot of the questions I got really around the current administration, the incoming administration and what those impacts are. I think I covered a lot of these questions, so I'm just going to touch upon maybe some areas of these questions I didn't go into detail with. And again, if you sent these questions and you don't feel it was answered fully, reach out to me and I will answer them in more detail and or give you the resources to do it yourself. The question there's a lot of, with people based on their political viewpoint, as I said, there are people that really think that this new incoming administration is going to do an amazing job. They're going to clean up a lot of this mess and the economy is going to do great. It's all optimism. And then there's another group of people that are very fearful. They think things are going to be terrible under the new administration. And that is where a lot of this plays out, is more of a political view. And as I said, nobody knows for sure, but I do want to bring up a lot of questions around where should I put my money? Is there going to be a recession? Is there going to be a crash? How can I be safe? I would not, at this point, I do not see a recession in the future, not at least in the near term, and probably not this year, unless there's a shock. Okay, so that's unlikely. However, there are a lot of places to put money that you're just saying, I don't want the ride. Hey, Christina, you said I might get a little bumpy. I don't want the ride. These are highly personal decisions, and a lot of them, each one has pros and cons. So I strongly recommend that you talk to either myself, or again, if you have somebody else that is advising you, to look at those options. My only high-level recommendation is make sure you don't lock it up. It's liquid and flexible, so you can move it, because the environment will be changing. But there are options, and that should be for money you're not comfortable bouncing around, and also money you might need in the near term. There are definitely some good options there. A lot of questions on, I don't trust the media. Where can I get reliable information on the economy? That came up a few times here. It really depends on the information you want. And all, media, remember, is they have an agenda. They have what they, wish to sell. Every morning I look at Fox, CNN, and MSNBC online, just to see what a lot of my clients are seeing. And the story is very different depending on who you listen to. Economics, same thing. There'll be focuses on different areas for different reasons. I really think that there's a lot of good sources, like I mentioned, the Fed, it's very dry and arcane. It would be very beneficial perhaps to talk to me. And I'm saying this, or you're professional, only because I don't have an agenda and I'm gonna make it more relevant to your life. Rather than the media, though, will give you ideas. You'll hear something in the meeting, go, oh, okay, is this important? Is this real? Should I ask Christina about it? So don't not trust them or not listen to them. But yes, all media has its agenda. It has for a long time. It's that won't change under this administration, for sure. And then, yeah, the questions too, I saw this a couple times, who will be in control of the economy? I kind of touched upon that a little bit. There's not one department or one person that controls the economy. It's policy that gets through Congress, as well as how things happening even outside of our country. So there's a lot of things that control the economy. The president is only a small amount of that. Just keep that one in mind. What's most important is you're managing your personal economy and you're navigating changes outside your control, and that's where a good team and will help you. Will help you make sure that there's nothing you're missing. Tax policy can have a bigger impact on you than the president, so that's an important thing to keep in mind. And one last thing on that: don't listen when they say, "Ooh, this tax policy is great for the wealthy, terrible for the poor. Great for the poor, terrible for the wealthy." It's always these generalities that are nonsensical. I talked about this before, but the Tax Cuts and Jobs Act did not benefit the wealthy more than the poor. On a percentage basis, the middle class benefited the most. People making from $50,000 to $200,000 a year on a percentage basis saw the most benefit from the Tax Cuts and Jobs Act that was passed in 2017. Dollars, that's a different story, because someone who has billions and billions of dollars, a tiny percentage will mean more money. But on a percentage, which is the true impact on your life, is percentage, not dollars. There was more. So that's, again, one of those media generated things that's not always upfront, not always honest. And there's a lot of times a narrative in there. So don't worry about all that. Figure out what you and the people you care about need to do. And then talk to me and I'll be happy to guide you with that. I think I answered the question. Okay, I'll put this one quickly here. Will FEMA be bankrupt over the California fires? They say not. At this point, they say they have plenty of funding. Of course, we don't know what the full cost will be. A little bit of a wrinkle in that right now, and I don't know if this is going to stay or not, was generally FEMA pays, I want to say 70%. I could be wrong on that, so don't quote me. FEMA pays 70% of certain things after a disaster, and the state will pay the rest. And that's to help cost share, right? It's help the state has to actually balance their budget, unlike the federal government, and the budget can be destroyed by a major natural disaster. So that's where FEMA comes in. Excuse me. And so that's usually the way it is. But the Biden administration, or Biden, came out and said, oh, we'll cover 100% for 6 months. Well-meaning, I'm sure that creates a big challenge, because North Carolina, that was seriously devastated, didn't get that. Other states didn't get that. So does this, I'm not saying by any means this was the intent, but it starts to look a little unfair, even maybe political, when one state is favored over another. So I can see a potential pullback on that to kind of equalize it. I can also see a scenario where, and this is not just California, any state in the future is required to do certain things to prevent, not to prevent necessarily, but to mitigate these issues. Like maybe say, hey, California, you need to show that you got your infrastructure lined up so we don't have these same problems again. Not the fire, not the damage from the fire, but the other issues. So, and this would be for every state, perhaps. Some states have to hurricane-proof themselves a certain way. Others tornado-proof themselves. Others fire. There could be some more requirements that the states kind of be better prepared in exchange for future funding. These things have been talked about by both sides of Congress. So I could see that happening in the future. And that, of course, will help make it sustainable going long term. Let's see if I can get a couple more in here. Is debt a big deal or a Republican talking point? Debt is a big deal. Deficit, actually, deficit is a big deal. Debt's a big deal. It's problematic because the more higher it gets, the more flexibility we have in the future to deal with significant unplanned impacts of things that are happening. Whether it's long-term planning, like how do we mitigate the effects on society over, the climate changing, right? I mean, we're gonna, try to clean up all the forests, and we're gonna do all this work. It's gonna have a huge cost. So if we're running up debt for a lot of pet projects, and we're not saying, hey, this is the greatest benefit for the greatest number of people. And I'm not saying that's what should be done. That's just an example, right? Maybe somebody else will say we need to fund the schools more. There's all these different ideas that people have, but it's the shock events that we don't necessarily have enough money to be able to pull from. We've been very lucky being the world's economic superpower. We get away with stuff that a lot of countries don't get away with. There is a limit to this. And the bond market's already getting spooked here and there. Treasury market, we watch it. We know it's getting spooked here and there. It's not full on spook. It's not heck. We're going to the bad times, which that's probably still a few years away. But this will, as we say, the chickens will come home to roost. This will be a problem. The faster we can get a hold of it, the more flexibility we have to adapt to any crises that hit us in the future. This is not an unlimited ability to do so. So it's not, there are people that believe debt doesn't matter. We're the superpower. Yes, it does. Yes, it does. Because all it takes is the rest of the world losing confidence in our ability to manage our financial affairs, and they don't show up and buy our treasuries. Game over fast. So it does matter. And we don't want to be in that position. From a superpower, you don't want to be in that position, because it gives our adversaries more ways to hurt us as well, or to weaken us. So it's definitely does matter. Sometimes, it's a little bit of, run for the hills. It's a little bit more extreme. Sometimes politically, it's like, well, if we do it, it's okay. But when the other side does it, it's really, really bad. It'll be interesting to see how the incoming Trump administration works. Their proposal is to grow the economy so much it'll, it won't matter, but also pay down the debt. These are things they're talking about. It's going to be really, really, really hard. It is going to be really hard. It's not going to be as easy as they think. I don't care what the government efficiency department or office or bureau, whatever this is being called, that Elon and Vivek are working on. The numbers are so big and it's so complicated and it's so entrenched. It's not going to be that easy. It's going to be a big process, and it's likely going to be going on into the next administration. So there's no easy fixes there. And I liken it to taking the punch bowl away from in the party, right? Everyone's having a good time. The economy's doing well. There's money's outflowing around. And then someone says, okay, that's it. We got to cut this off. It's hard. It's hard because it will have an impact, and it will also give the Democrats a lot of power to come back and say, oh, they cut all these programs. They're terrible people. But someone's going to have to cut them. Just a question of what they cut. Where this could help, I'm going to pick on the Department of Defense for a minute. Again, hope I don't offend anybody. The Department of Defense has literally failed their last 7 audits. There's a lot of money we can't account for. The SNAP program has hundreds of millions of dollars in fraud every year, known fraud. This is all available on the GAO.gov, the government's accountants. We have a lot of room to save money without having to cut programs. I'm picking on, again, the Department of Defense just because you failed your last 7 audits. Most people be in jail. So, okay, not saying defense isn't important, just saying we got some room here. All right, I'm going to do, so the last couple of minutes here. Okay, I know who you are. I'll answer this question privately. Looks like you have embraced monetary theory. What is your view of it? Oh, actually, you put that question up a lot earlier, so I did touch upon it. I don't embrace it because it sounds great, and it's a great theory for an academic in a university to play with it and say this could happen. But in reality, if you play that game, you are absolutely, your entire national security, the entire fate of your entire population rests on the rest of the world trusts you and buys your securities. And that's dangerous. It's very dangerous because you have just given away your power. So I'm not a fan of that. We've been playing that game for a while. We have a lot of room for it, but it can't be the sole be all. We can't have massive, massive debt levels, because we will fail the minute someone thinks we can't meet our obligations. It's game over. And listen, I'll make the financial crisis and the Great Depression look like a cakewalk. We don't want to go down that path. So no, I do think we have a lot of room, and we have the ability to grow our economy to absorb a lot of this debt more than any other country in the world, but it's not infinite. We do have limitations. We have heard that getting insurance is not going to have severe criteria, that insurance companies will be following. I'm sorry, I don't fully understand the question. It's going to have severe criteria that insurance companies will be following. Yes, there was some misinformation put out after the fires. I'm not going to say who said it, because there's no way I'm going to say that and it's not going to be political. Well, you know what? Actually, I need to be open and honest. Skip that. There was some wrong information that was shared by Kamala Harris. And again, I'm not picking on her, I'm not taking political sides, but I feel it's really important to call this out. And she may have just tried to talk high level and not go down into the detail. And so I'm not saying this was intentional, but it did scare a lot of people, which is basically like insurance companies are canceling people that lost everything in the fire or something like that. I'm not quoting her, but a lot of people got scared because like, wait, what? The insurance companies cannot pay? You know, we have insurance. No, what it was is people had been canceled before the fires. And some of those people had chosen not to get new insurance, either Cal Fair Plan or otherwise. And those people obviously weren't covered. That's what she meant to say, I'm sure. But the way it came out in her words was insurance companies are canceling people that lost, you know, their property or, you know, went through the fires. And the reason I bring that up is that insurance companies in California cannot cancel you in the middle of your policy unless you've committed fraud or you don't pay your insurance, your premiums. So you can't be canceled in the middle. It's when it comes up that they have the right whether or not to renew you, and that is entirely up to them. But if they're in contract, they have to meet everything in the contract. California is even stricter than other states, but you're fine as long as you're insured. It's certainly, that's why I say review your policy. Just make sure you know what's covered, and you don't have to do that out of fear. You should do that with all your insurance. Just periodically you review, or if you have an insurance agent, review it with them. Just make sure you really understand what's covered. When I mentioned that my insurance got canceled and I was looking at new policy, I actually wasn't sure of everything that was covered. I had to look a few things up. So it's kind of nice to know, because there's some things you may say, you know what, you know, a high deductible is fine. That's what I did. I have extremely high deductible on mine, especially on wildfire, because if that happened, I can handle this. I just want liability if my tree falls on somebody, God forbid, right? There's, you know, different things. Somebody else could look at something differently and say, this is more important to me. I don't have the resource in the same way. But do know if you're insured, you're okay, and you will be insured. I would just take the time to understand what was covered there. So yeah, we're coming up on time now. I'm highest intention with this all the time is that all of your questions are answered and you feel have a better sense of things that are happening in the economy. In the next webinar, again, it's gonna be live and in person. Oh, by the way, we have a special guest speaker. We've had him 2 years ago. Everyone loved him. He was the first time that most of our clients ever heard about AI. So he's really forefront on top of things. He's gonna be talking about a lot of stuff coming up in the economy, also newer technologies, innovation and whatnot. Again, this will be live. We'll give the dates and the information, register online if you can't make it to the live event. Also, if you have any questions that are coming up during this time, please do not hesitate to reach out to me. Schedule time, we'll talk it through in more detail. And the next webinars, as we get into March and April, I'll be able to dive down a little bit deeper in policy and kind of what's happening with the incoming Trump administration. I'm taking a wait and see approach to this because there's a lot of things that are unknown at this point, and that's a prudent thing to do anytime that you have an incoming administration. So, you know, just to sleep well at night, don't worry as much about the news, worry about more what you can control and focus on the things that bring you joy. I'll take care of the rest for you. Thank you very much, everyone, for listening. Oh, I'm so sorry. Oh, someone just gave me a compliment. Thank you. I just want to make sure I didn't miss a question. Thank you very much, everyone, for listening. It is truly a deep honor to be able to be working with you and navigating all of these changes that are happening in our economy and in the markets and applying it to your personal situation. Even when times are challenging in your lives and in the greater picture, it gives me it's a true honor and with tremendous gratitude that I'm doing the work that I am to make you, your lives and your family's lives optimistic and better. And there's a sense of security and knowing in this an unknowing world. That being said, like I said, don't hesitate to reach out. And for those of you who can make it, I'll see you in person next month. Thank you very much. Bye for now.